So if somebody wants to give a life insurance policy, it's not uncommon for us to kind of go through and help them restructure it, because I would say that most charities aren't, whenever they get those, they don't necessarily want to continue to make premium payments on them. But again, working with a group like ours, we can help restructure those often and make sure that it's fitting the actual goals of the charity as well as the donor. We also have, situations where you have charities who are accustomed to receiving annual donations from families on a very regular basis. And so they kind of build that into their annual cash flows. And so if that's kind of embedded in that charity's annual cash flows, the loss of that person or the loss of that donation can have, in some instances, a pretty substantial impact on what those cash flows are going to be in the future. So sometimes we'll see charities take out insurance policies on significant donors to help protect that loss of income. For those business owners, you can kind of think about it being key person insurance in a way. If this person is contributing a lot to this cause, specifically through this organization, we do see some charities that they look to do that as well. And then you have families who just really want to give large endowments at the end of the day. So we'll see sometimes where families will go, yeah, you know what, when I pass, I want my name on that building. Well, sometimes one way to do that is to buy an insurance policy and just have that death benefit paid out to the charity. That's not necessarily uncommon too. What is more common though, and this kind of goes back to the point you were making a minute ago, Celeste, where all of a sudden the wife didn't have any money. Sometimes we'll set up what we call wealth replacement trusts. So whenever you're looking at a client who's looking at giving away a lot of their wealth or a substantial part of their wealth to a cause, sometimes they'll buy an insurance policy in a completely separate trust to offset that donation. So now you ensure that your heirs, your kids, or whoever you want to benefit outside of the charity with your wealth are sort of made whole for any amount, or to the extent that you want anyway, enough cash to help offset that donation. And so in your example, it could be that maybe those are business interests or the real estate, or there's something that has to be managed and the spouse isn't capable of doing that. Well, sometimes you might just want to give that away, have an insurance policy come in, and now spouse, kids have cash they can run their lives, and they don't have to worry about the stress of running a business or things like that. So those are a few ways off the top of my head anyway that life insurance can be used in a charitable manner.
Yeah, and so we work locally with some national nonprofits that use this very regularly, and they use it for a couple of different reasons.